Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
All right, so we are in a uptrend. We have an up arrow, and let's see what kind of time range we have to the zone. And from there's the bottom of the zone. Here's the we have 6 pips. That's way too close. No trade on that one. So we can take that one off. We're not taking it off. We're just going to make that one small, and then we're going to look at the gold alert. And you can see with that, we are in a pretty substantial downtrend with the gold. I'm going to move this over to my time of the 1500 candle. And that's at 8 o'clock this morning. So that's going to be a little bit over here, I think. Right about there. And that's going to help mark our channel for the reversals. We can have contra trend trades. We can have between 8 o'clock and 10 o'clock East Coast time. I'll try and mark that on all my charts. Right about there. Okay, so we have we're in a downtrend. We have a up arrow. That merely says that we don't take this trade, but let's take a look at it. And you can see, let's see what kind of a channel this thing's trading in. I'm trying to
pretty strong push here. Down, eh?
And let's see, we have our green. So let's just the whole zone range is basically let's see, from 1838 to 1833. So it's we have a $5 range, but we don't have the range with the top of this candle. So we needed at least $5 for our target. We don't quite have that, so we're just going to hold off on that one. And if we go and scroll down and look and see what you can do is if you take that alert box off, you can just go to your alerts, and this will pull up all the alerts you've had recently, and you can just scroll down and see where some other alerts may have been. Yeah, here was this was Euro Swiss was the other one that was before where we are right now. Euro Swiss. And I can see that there's an awful lot of really tight ranges here today. Let's just see what the whole range of this thing is. The whole money zone range is on this, it's only 19 pips for the whole money zone. That's from 1 o'clock this morning till our current candle right now. Not a lot of range in that. We haven't seen a lot of really tight markets, really tight ranges here lately.
Yeah, everything's been consolidating pretty hard.
Yeah,
so
yeah. The NASDAQ,
that's why some people haven't had any real trades. You know, there's a couple great opportunities, but I've been looking all morning, right? So I've been watching attentively and found a couple great opportunities, but just waiting for a nice alert. You know, the traps are all set and we're ready to go.
So while we're waiting for the next alert, does anybody have any questions, comments, any platform issues they want to talk about or anything like that?
Excuse me, can you go back to that New Zealand Swiss for a moment?
New Zealand Swiss. New
It's
Zealand,
up.
right here.
Yeah, please.
Okay.
Can you pull out? I just didn't see. I don't know if maybe
zoom in. You mean?
Well, you know, so we can see how many. Like, you know, I just wanted to see where the next zone was. That's all.
Yeah, it's right up here. That's I'll make a mark for you here.
Okay.
I'm showing it to be right around, well, let's see, right here, this one is
It was short.
64.82 and 64.82 to 64.86. So it's really, that's only 4 pips wide, which isn't very much.
Okay. No, I just didn't know how far it was from the for the
From
counter
the
trend, you know?
arrow? From the
Yeah.
arrow was?
Like how many, like, yeah, like I didn't know if we had more than just those 2 zones because I didn't know if we went all the way out. That's all. I could be
Okay.
totally wrong. I could be wrong.
So you're
So are
talking any zones higher up? Is that what you're asking?
Yeah, like you say, yeah, because sometimes when I find if you scrunch it along the side, you see even how much stronger it is. So if you have
No.
to do like a counter trend thing, like are you going into a wall?
Yeah, so if you zoom out all the way, there's a red bar that'll appear higher where price used to be. I think that's what you mean, right?
Yeah,
But yeah, there's
okay.
nothing. It's
You're great.
clean sailing, but there's a zone. So
What we have to do is if this does break this, we are in an uptrend. If it does break this little red zone, now what we're going to do is we're going to go into a higher time frame and see if we can find a red zone above it. See where that target
nothing.
might be. Nothing there. Nothing there.
Al, I have a potential play here that might
Okay.
work. If you draw a wedge right where we are on NZD Swiss.
NCD Swiss, right where we are.
Yeah,
Okay.
on the on the 15-minute time frame.
Okay.
So it'll be ascending.
An ascending wedge. Okay, so we have. I'll tell you. Let me go and get my trading view charts up because
Yeah, it'll be easier, and you'll see it, and you'll see exactly what I'm looking at because we could have a potential trade if it breaks that trend line, which that trend line is sitting at that same red resistance zone.
Hang on, let me get my trading view charts over here and I get on the right template here.
Definitely.
Let's see, we got the NCD Swiss, you say. So we got there, NCD Swiss.
Yes, sir. You'll see it right away on the 15-minute time frame.
All right, let me pull this over. Okay, here's the NCD Swiss. We're on a 15-minute time frame. Let me maybe clear off some of this stuff here. Turn those off, turn those off. And we're gonna do is we're gonna be putting some of these charts under a microscope so everybody can kind of see the price action, and it's just so much easier on TradingView. This way I can draw lines on this chart on this time frame and it'll propagate over to the other time frames. You can see this is a nice move up. This would be the origin of this last little leg. So what I would be looking at doing is putting a trend line from this little pullback right here.
I went back a little bit more, Al.
Maybe even a little bit more.
Yeah,
like
because you want it closer to
catch that one. Want to catch that one? You want to go all the way down?
No, right there, Al.
Yeah.
Because you're getting pretty close there, and that third hit is what I'm looking for. I'm looking for it to bounce on this trend line. Now, if you put a trend line on the top there, from the first high back, you're gonna have it like pointing upwards.
From this first high, this one here?
Yeah, and then backwards.
That one.
Yeah, that way.
You look at the channel, the upper channel.
Yeah, I was looking at the channel. Sorry for making so then we drop that one down a bit. Right there, my friend. So here we got a potential nice setup here.
This is almost a potential M setup right here.
Mm-hmm.
We have a slightly upper channel. We have the bottom trend line, an upper trend line, and you can see they're starting to converge over into this area. Does everybody see the M on this one right here? Here is the first leg of the M. Here's the middle of the M, where it pulled back about 6. You can see it pulled back about 60 8.4%. And if we get a lower high up here, like this, and then we could come down where it'll probably come down and maybe retest somewhere either down here or maybe even just a little bit up above, right about where there's like a little wedge right here. You can see nice big move up, little basing. You have a little bit of a triangle. You see the little wedge there. And right about here is where it flat topped, right about in this area right there. And you can see that, so I'm looking at this little zone here would be an area, once this thing comes back down, this would be a zone where it's probably going to find some buyers possibly, because this is where the strong move came up. It based, this would be sort of like what we call a retest area right in here.
Bingo.
And we label that a retest. And so, and if it's a really strong move, it'll break through that.
Up a little higher. Down.
Where's my retest?
Up.
Target.
Up 4.
Up 4, 1, 2. Oh, thank you.
You're welcome.
I knew it was there someplace. And then this is that when Nathan talks about the M's, he also talks about like the second leg of the M. Oftentimes it's down a little bit lower. Sometimes it'll even come up a little bit higher. But most of the time, if it's a really on a certain patterns, they'll be slightly below. Usually, and I usually like 86% from the A. This one from the X to the A. Here's our 60%. We often talk about the 62% retrace. Well, that's not too far off the mark right here. That's 60. That's within a couple pips of it. And then it comes back. So here's your first leg of the M. Here's your first shoulder. Here's the middle of it. Comes back up. We're looking at this thing to come back up. And so if it breaks this trend line right here, it's probably going to be coming on down to this area. From that area, from where the B is to the zone. Again, that's only 6 pips, not a whole lot. But you also see where it's forming a little bit of a wedge right in here. You know, another little wedge forming. Here's the first leg of the wedge. Comes back up, goes back down, retest. Then I like to just bring these two together, to bring these 2 points at the top and have a. So if it breaks this little part, it's got to get through this blue one, this big blue trend line, and we may get a little bit of a head fake to the upside, and then maybe come down again. So right now, it's in between. It's not real conclusive, but we probably want to keep an eye on this. But we do know we had that alert with the up arrow. Slide this over, get out this out of the way. And we move this out of the way. Oops, wrong chart. I don't want that one. There we go. We had the up arrow. This was right at the 1, 2, 3, 4, 5 candles ago. So we're on a 15-minute chart. 1, 2, 3, 4. This was the up arrow right on this candle right here. This is where the arrow was. And then we have our zone right up here. If it can come up and break through this, then we have to go over to our higher time frame and see where that price is. Get a Fibonacci line on here. This is a major line right here. If make sure I'm on the 15-minute chart, I am. So this little red line right here this is a major turning point right in this area. And we're going to put this on up. Find a 15-minute red line. And then we're going to go back a little bit to the left of the chart where we can't see it right now. So we're going to zoom back. We'll just go to a higher time frame to get there. And you can see from this is Wednesday, Tuesday, Monday, Sunday. This is Friday, Thursday, last Wednesday. It was right here. Keep on going, still nothing. Come to a higher time frame. It hasn't been up in this area for quite a while. There's a 4-hour chart. Daily. It hasn't been up there in a very long time. I'd be looking at this thing's going to be turning around because we haven't, I'm on a daily chart and there's still nothing all the way back to May of last year. You have to go all the way back to, this is a long time ago. There we go. We haven't been at this level since January of last year. So this is the high. This is a significant area right here. See this big candle? This is, we're on a weekly chart now. So in this week of last December to January was the last time this price has been up to this area. That's a long time ago. Here's a little wick. You can see here's the weekly. This is the weekly candle. It was a bearish candle. And this is the, right now we are right at the origin of where this area, where this price is. On that. Usually you don't have to go back quite this far, but when you do, it's significant, especially if you're looking at a possible turnaround point. Let's go back to our 15-minute chart. I'm going to see where those lines are. And see we're right in that area right now. That's one reason why we're not getting a lot of range on it, because this is the same area it's been in a year ago. You can see where I drew my lines. So this whole area is a very significant area to be paying attention to. And if it breaks this, it's got a long way to the upside. If we go back to that weekly chart again, if it can break this little wick where the area is right now, this is the next stop on the road. Right up here. Yes.
When you have a moment, we've got one of the attendees would like you to have a look at the US CAD. We had an alert about an hour or so ago, and they jumped into the trade. So now they're wondering if it was a viable bag entry, because they're in drawdown and it has been like an hour plus.
Okay, let's take a look at that US CAD.
US CAD, yeah.
All right, let's go take a look at that. US CAD's down here.
Oh, I took US CAD this morning on a buy, and I hit I took 10 pips and dipped because it was I just wanted 10 pips out of it.
Let's
Got a lot of room on the upside though.
Yeah.
Isn't it uptrend? So I guess the question is, did it follow the rules? Let's take a look if it followed the rules. There's the uptrend. We are in an uptrend, so we're going to put an up arrow here.
So where did you get in, Shiva?
And so we're going to scale out to take a closer look at it. This looks like a pretty nice little bounce arrow go on this one.
Yeah, I would have been all over that.
Yeah, this was, I don't think he did anything wrong.
No, it's the wikis, I think that's
Yeah. So here was the nice little bounce, bounced again, arrow, go. This is a viable trade. From this from where this is. If it doesn't work out, you didn't do anything wrong that I see so far. That's a 71 pip move for potential on this one. We are in an uptrend.
Peekaboo on this one, Al?
What's that?
Can we do a peekaboo on this?
We can. Yeah, let's do that. We can do that.
Something in the way that's keeping it down right now.
Let me get some lines on here. So the open of the trade was at let's go 27.84 roughly. 1.2784. Let me just tweak that up a little bit. See,
okay, she says that she got in at 1.2794.
Oh, that's 10 pips after I did.
Oh, the entry would have been right on about 12787.
Yeah.
94. It was a little late getting in, but that's not over the top.
No,
especially with the range that you're looking at. Let me get the
okay. She says I jumped in once a resistance zone on the 5-minute disappeared.
Okay.
Okay.
Makes sense.
That would make sense. Okay, 127.87. So 127.47 would be your stop.
Yeah, I
Yeah.
got in at 85.
And it opened, and the target would be anywhere from 1.27, actually 1.2807. 1.2807 would be your first target for your 20 pips. And let's do a peekaboo on this. So right here's where your stop would have been. So you had a nice little zone behind. There was absolutely, this would have been a very nice, I would have been all over this one myself had I been up. So we have the, let's mark this. So this would be where the entry was, right on this candle. We'll go to our 5-minute chart and take a peekaboo, see what the trend looks like on that. It's 15. It's a little slow this morning. Come on.
It's working pretty painfully slow this morning, my friend. I'm
just
having
like
some
it now.
trouble. For the first time in 2 months, I'm having trouble.
Okay, what we'll do is we'll go on my trade. We'll put this on the trading view chart and we'll dissect it a little bit.
I'm going to go look at that Ethereum question.
Yeah, thanks, Matt. I'm actually having a look on my US CAD chart, Al.
Oop, there goes everything.
There's a little there's resistance a little closer to the price on the 5-minute, but still there's still room to make your pips.
What was that pair again?
US CAD.
US CAD.
US
CAD.
On the
Okay.
1 minute, it's showing a down arrow as well since the buy arrow. So
Okay, I'm gonna go over to this chart here. US CAD. We'll find US CAD here.
She should be up now. The price has been moving up since we've been talking.
Mm-hmm.
it hasn't yet. It hasn't, not on the 1 minute anyway. The last arrow was still
15-minute
Well, I'm
chart.
just looking at the current price to the price she got in at.
Right.
Yeah.
And that price was what again? 127.80.
Oh, hang on, I'm on my chart. I gotta get back
It's
to
127.87, I think, is what the
27.94.
94, yeah. Because I got in at 85.
794.
She's right around break even, just slightly below.
94. So that's right about. That's right on. That's right. The price is where it is right now. You should be about break even right now.
Exactly.
What was the time? What was the opening of the candle of the arrow? What candle would we take? What time was it? The candle open on?
It was over an hour ago that it came through.
Yeah, can you give me a time on that?
Well, we can probably see it on our chart.
About 4:45. It looks like maybe. Oh, an hour ago you said it'd be.
Yeah, but an hour.
More than an hour ago.
I'm guessing it was probably right around here, about 7 o'clock ish.
It was earlier than that.
Oh yeah, way before that. Hold on here.
So here's a bounce. I'm guessing it's probably right around in here.
Yeah, two back from there. That one. Yep, that's the one she would have
That's
gotten.
the one. That was her entry candle right there.
Yeah.
Okay. All right. So what I like, let's see, what did we? And we were in an uptrend, so that's a good thing. We had a nice move down. Here's our W. Remember we talked about M's and W's. I would be looking at the W. We could take it all the way back here, but I don't see any real need to take it there. This would be a nice little. This is a nice strong little move down. I'd probably take it from here. Here's the first bounce. Hang on, I got the wrong tool here.
The buy on the 15-minute, the buy candle came in at 11:15 computer time, which was an hour and 45 minutes ago.
11:15. So 11:15.
And she got in the one candle later because she was waiting for that 1 minute or
Exactly.
5-minute resistance.
Yeah. Well, either way, we're in the right area anyhow. Either way.
Yeah, I think that the yellow arrow, I think, is the candle she got in on.
Here's our W. When we talk about down, this is where this is like a classic W right here. So here we had the pivot high, pulled back down, and then now we're coming on up to retest, and probably retest. This will be our first retest, and this will be our second retest probably. So there was lots of room, and we had some zones way up in the upside. So your stop was we had a entry of right over that price for 20. Let's just say we had the 40 pips for a stop. Remember, it was way down below there. So let's go for a stop target. Stop zone to be down here. So if we got in at say 94.40, be say 54-ish. That's all the way down. You still have, you're way below this whole area right here, which is good. And the other thing I like about this particular pattern is we had a nice move down. We had, this is the peak of the W. Here's the second short of the W, which is a little bit higher. That's a perfect example there. And then what I like to do is I usually take it from the X to the B, draw my trend line from that direction. And once it breaks this trend line right here, you see here's the wedge break right here. And now here's our, so we have a bottom, there's a top, there's a pretty much like a double bottom, flat top it up from the on the top side. And this thing should be off the race. So as long as this thing keeps on moving in this direction, we had the cross of this trend line, and now this thing should be going to the upside. This looks like a real viable trade even now.
Al?
Yes.
Looney had mentioned in the chat that you see where your A is. I know it's hard because we don't have our other charts back. Yes. That Looney had thought that that would have been like a bank induction because, you know, the strategy where Nate has where you have like you usually have, I think it's 4 to 6 candles in a zone, and he allows you to then go take a position after, you know, when you get above. But you can't, it's hard to tell here on this chart because we don't have the zones where it's more, because it's more advanced strategy. So maybe when we get our internet back and we get the zones for arrow, we can just go back to that. And also if we come across a head and shoulders, somebody would like that explained.
Yeah, I'll be honest. The first time I heard the term bank induction was with Nate. And I really not familiar with the term or really what it all means. So I really can't comment on it. I do think there's probably some. If it what I think you're referring to as a bank induction, what I usually call is pretty much the retest of the bottom where you're drawing this, where this whole pattern starts becoming into play, where you get your M's and W's. If that's where the bank induction is, then I have to say yes, it is. I'm not real sure. I'm not that clear on the term, so I hate to comment on something I'm not that sure about.
Okay, and then just if you can keep in back of your warehouse,
yeah,
the head and shoulders strategy.
But this does look like a real viable buy.
Looks
Let's
great.
see, did we ever get? No, we never got our charts back, did we? Let me try again here.
Actually, I have to make a public apology to Shiva. Shiva is a male.
Oh.
He corrected me on that. My apologies.
Let me see if we can get this back up again.
Actually, Trey said that his remote desktop threw him out today, too.
I got my charts back again. US CAD, and we're in the. And I said I'm perfectly good with taking this trade to the upside. We have lots of room to the upside. Now, one thing I do want to see it break out of this. Now, this candle right here made a new money zone high. So now we really have all this area. The money zone from yesterday is all over this one right here. So if it can break through breaking through, it could go all the way up and retest the top of this. So this could be a really nice. This could be a really nice trade.
And just keep in mind, Shiva, that when the moving average, the blue line on the bag's chart, as long as your candles are above the blue line, you're okay. Except now I noticed that you've got some resistance.
Yeah, well, this is our peekaboo thing here. So this is 5-minute chart now.
Yeah, on the call,
and they're all pretty small. They're all pretty small zones.
So on the call with Nate earlier this morning, he had mentioned something that I wasn't aware of. Is that basically he emphatically said when it comes to when you're trading on the 15-minute and the trend is very strong, then going back for the going to a lower time frame is not favorable. And he said, like, the only thing that he would do is he would actually go up in time frame to see how strong that actual trend is, instead of going down and finding like a sniper entry. He would do more of a swing. So that's just what he did, or he was explaining on the call this morning.
I think there's a lot of truth to what he said. Is that I think it's good if you get the arrow, and it's oftentimes when these arrows are developed, you'll meet in most. If you look at a lot of candle formations, you'll get especially like from a 15-minute chart, a 15-minute candle, it closes. More often than not, I'm not going to say what percentage because I don't know, but more often than not, the next candle will retrace a little bit and then go back up. Then, so usually what happens is you have a low, a high, and a close. Then you get makes a higher low. It doesn't break the bottom of it, makes a higher low, and then comes up and makes a higher high. With that, when that candle 15-minute candle closes and you get that pullback, that's where and it's only on that one, probably the first couple of minutes of that candle where it really makes a lot of difference, is that then you can zone in on this particular candle. Let me just see if I can move my cursor over here to this. Because this is a candle, this is the 15-minute candle that closed, and that was, actually it's not that one either. Let me get on the 15-minute chart. Well, actually that would be, let's move this over here. So this is the candle, this is the candle that opened at 11:30. So if you go to your 5-minute chart and you look at so this is the candle that opened. So even though we have an arrow here, but remember, this was the first candle after the up arrow. And you can see it pulled back a little bit, and if you zoom in all the way down, if I don't mess up my charts now, let's see what happens here. And you'll see I don't even have my vertical line because it's on the wrong, it doesn't read that minute like that. But you'll see that the first 5-minute candle pulled back first. You see this little slope here. And then, so the peekaboo will do is it will help if it's in this downtrend. You know, as long as this candle is going down, all you're able to do is get a better entry. But once you're in the trade, then you just let it go, and then you get back to your 15-minute or your higher time frame to see or even go up to like the next higher time. This is what Nate was saying, because this way it really tells you how strong that trend is. Because all those lower time frames are going to do, all it's going to do is put up these red barriers in front of you because it's on such a low time frame. You're going to keep thinking you're going to have to get through that, got to get through that. You have to get through it, which they're there, it's valid, but it's not strong enough to even show up on these higher time frames. And
absolutely.
So now you've got the full shot.
There's a lot in that, and it may also be in reference because the whole peekaboo idea comes from indices, which move a lot faster at the lower time frame, right? So you're not going to look. It's not the same game. It moves. The indices move like a rocket, and the forex moves significantly slower. So I think that's where that whole idea came from. But when it comes to having a very strong trend, like for example, USD CAD for a long, that's a really strong trend, guys.
Yeah.
Now, Al, Rich, you're just going to mention that. Rich would like to know, would you change your take profit on the US CAD here, seeing you do have so much space? Question.
I would say it depends on your trading style. I'm very happy with taking my 20 pips and moving on. But on the same token, now if I were trading with Nate and he's doing, I mean, this is a really nice, this particular trade, I might be willing to let it go a little bit more. What I would do is I'd be looking, I go in the higher time frame like I just did, And I'd be looking to see where did this trend line get, where did this down move start? And I look back and see, here was the up move, here's the this area right here is where this whole down move started before. Well, wherever price was, price has memory. And I like this strong move down. So right now, remember yesterday I was pointing out that I go over to see the price and look and see where the wicks are. And if I run into a wick, I come up, I move up to the next wick. Right here, you hit the wall. This red candle here is the wall. So once you can get past this wick, this point right here, this little candle right here, the top of that candle, you see where there's no wicks at all between this run. So if it can get a close above this line right here, which it has not yet, here it wicked up, pulled back, wick came up, couldn't make it up there, pulled back. Now this candle right here could be, if this candle can come up and close above this line, this is the next floor on the elevator, right there. So, but I would be expecting to see a bounce off of this because this is where the sellers took over. We had the buyers took over up here. They came back down across the moving average. The sellers started taking over. It based. They got down. They got a little bit of a pushback, but this is where the sellers really took control. Right at this point right here, if I can draw a, let's see, let me get my tools up here so if I can find a, let's see, a channel. Let's see, where's my rectangles, lines, trend lines, shapes. Here we go. That one, shapes. Come over here to the inserts and you look for the shapes, click on a rectangle, and then you can see this is the area that I'd be looking at is it would have to get through, and this is right, and I'm guessing that if you go back to that 1 minute chart, you'll see, if I were going to do that, let me make this a different color. My right click, see if I can get on this thing. There we go, there's the buttons, there's the rectangle properties, common. I'm going to make this one orange just so we can see the difference. Oh, I did not go orange. There it goes. I'm going to go back to this. Remember we said that we saw some red zones up here when we went down on the 5 minute chart. I go down to the 5 minute chart and you can see this is right where those red zones were. Can you see that? Can you see that? So when you went down the 5 minute chart, basically all it's doing is identifying the same area we just did on the 30 minute. Only just had a little bit more. But remember I said that if it can break through this, which is the top of where that zone was, we still have another little red zone up there. But after that, it's pretty much clear sailing all the way up. So then that's one way you can sort of assess where your targets are. Another way you could be looking at this one, it would be from a, let's see here. We had, it really wouldn't be a retracement yet. If we're in an up move, we're in an uptrend, we're in an up move, came back. This would be almost like a Fibonacci. With the Fibonacci's, I was going through the strategies the other day, and the Fibonacci's, you're looking for an uptrend with a pullback and then a continuation. But the uptrend will have to start, you're going with the trend, it has to start with a candle that's inside the previous zone. So let's draw the Fibonacci on this one. So we're going to start down with this candle right here. We're going to move it up to the high right here. And now in order for it to qualify as a retracement pullback, it has to go and cut through the moving average line. And it has to be, the other thing is, now this one really wouldn't qualify yet because it needs to have a red candle for the pullback. It has to cut through the line and have a red candle because you're in an uptrend. So right now, this really wouldn't qualify yet as the pullback, and you'd be looking at from here, this is the high right now. This candle that pulled back, it was a little bit of that retracement. That was at a 50% retracement. And now we're right up to pretty much right where the Fibonacci line is. So this, if you did come in here, now like I said, ideally, this should be on a red candle. Let me go back to the 15-minute chart here. It probably doesn't qualify yet from the 15-minute. Let's see. Oh, we are on the 15-minute. Okay. Yeah, it really didn't have quite as deep of a pullback as we would need to qualify for that Fibonacci retracement. But then this would be the target, and then this would be the second target would be the 38. Next target would be the. This would be the first. This would be the first target right here. This would be target 2, and this would be target 3. But right now it hasn't really qualified because, again, when it pulls back, it needs to get you that red candle, which we never did get the red candle on that. But this is a really good example to be working with. No alerts this morning. Boy, what's going on with that?
No, we took we took them all. We took them all before this session.
Any other questions that maybe we could help put some clarity on some things?
There was a question that I answered, and I really didn't have a lot more more details about that, Al, but EU on the 15-minute appears to be near a potential money zone breakout. Would this be a valid trade? Now, I don't use the money zone breakout, and I'm actually honestly not at the point where I can
I do remember the strategy.
Elaborate on it.
Let me see if I can elaborate on that a little bit.
Yeah.
The money zone. Let's take a look at this. We have a
strategy 4.
Strategy 4. I think that sounds right. And basically, what they're looking at is you have the previous day's money zone. Right now, we're in a downtrend.
Strong downtrend.
Strong downtrend.
Oof.
And we're going to go with a arrow, mark the zone, so we know where the zone was if it ever goes when it goes away. We're going to, so we know we're in a downtrend. Let's zoom in. And so here's the previous money zone. So let's mark that one. So we're going to go put a line at the. Actually, we're looking at since we're in a downtrend, we're looking for the break of the bottom money zone right here. And so if we get a break of this zone, we could take that trade.
Ah, so that's all it is?
That's pretty much all it is.
Oh, well, actually, I see a nice wedge there, Al.
All right. Let's take a look at this a little closer. Let's go to.
Just to bring some credence.
Let me go to my trading view charts, Euro US. And we're going to go to Euro US. The one up here. And so our money zone was, give me the coordinates of yesterday's money zone on this one, Matt, if you would.
It would be, I don't like this time. The time changes are driving me crazy.
Go to reference. I
can't.
Here, I'll get it. I'll find it here.
Yeah, sorry, I can't figure it out. I can't zoom in enough.
Let's just say 21.2010. Call it.
Oh, the top, yeah.
1.20, 1.20. Right about there. Here,
that's close
enough. The bottom. This was the bottom of the money zone, and right now it hasn't. I still like to see a close below these different levels. So that's the bottom. We were in a downtrend, so we know we're in a overall we're in a downtrend here. And so we're looking for the break of this. Now, if we go to our higher time frame, we can find out if it breaks this area, where's our next target? Well, right now I can't see anything over here, so I have to go to a higher time frame, or I can scrunch the chart, but it's still not going to scrunch enough. So we're going to go to a 1 hour chart, nothing. Going to go to a 4 hour chart. Here's the first wall right here. So I'm going to, here was the bottom of our money zone. We said, remember that? We have a little bit of a wick right down. Nothing that's going to write home about. So I'm going to take this, and I'm going to go from here. So here's the wick. Remember we talked about these wicks. So here's the wick. If I come all the way over here, put this right down to the bottom where that last wick was, here's my wall right there. Here's my wall. So from here, I can come all the way down to the bottom of this candle. And then before I run into another wick. So from this point to this point right here, this is what I would call our demand zone. And we have another little level here. So basically it goes from here all the way down. So this really should go all the way down to right about there. Come back over, go back to our 15-minute chart. Take me back over. And this is what we're looking at. If it can break to the bottom, if it can break through here, this will be the first target. This will be the second target. This is the zone where the wick was. This is where the candle body was here. So if we can get a breakthrough, here's a little wet. Here's a strong move down. We have a nice little trend going right here. So I'm going to be looking at a trend from here. There's a low. There's a lower high. And we're going to align both these. I try and make this thing as, what I do is I try to encapsulate this, the lower high and the higher low. If it can break through this area, now Matt was talking before, he talks a lot about these sticks. You can see it's just so much easier drawing on these charts. If you're going to get into technical analysis, you really may want to consider. This is not an expensive platform, and so I usually try and take it like from where the top of the wedge is to the B, and then I move this over. So if this thing breaks out, wherever this thing breaks out, this would be my first target. And so if it does break here, my target would be right here, and that would be that 17 pips. So there's a good chance you get that. No, at least it'll give you at least a target of at least 13 pips. That, depending on what your expectations are when you take your trade, you can do a 13 pip target, and your stop. And you could be using rather than using a 40 pip stop, you could use a lot tighter stop on this one. So let's say you got in here, and you could have your stop. I'd have your stop at least above where the A is. So rather than having a 40 pip stop for a 13 pip initial target, you'd have a 26 pip stop for a 13 target. That's still 2 to 1, still not bad. But if you can get this thing to come down, close, break, retest, and then come down. So I'd be looking at something that will look a little bit like this. So we have a break, come back and retest it, and then make your target. And that's what I'd be looking at for, that would be my somewhat projections of, if we get the break, that's what I'd be looking for. There's really nothing over here that once it gets past this B, once it can close below this B, there's really nothing over here to stop it till you get down here. That could be a really nice trade, and you're with the trend because you have a strong down move. This would just be a continuation.
Down move.
Yeah, so it's just a continuation. Any questions about that? Again, a little bit of the technical analysis of trading, which is can be very helpful. And again, no other alerts. About a half hour left, and about a half hour, about 35 minutes left in this session. Let's see.
Did you talk about the Head and Shoulders?
I did not talk about Head and Shoulders. You want to talk about it? I mean, talk about what do you want to talk about with the Head and Shoulders?
Someone mentioned that they're brand new to trading and they wanted to know a little bit about Head and Shoulders. And
the Head and Shoulders pattern, let me see if I can find one here. This is right, what you're looking at right in this area, that's a little bit like what a Head and Shoulders. It comes up, it has a shoulder, comes back down, forms a little high. You can see where it just kind of came up and came right back down. And then it formed this little candle right here would have been pretty much, this is the way I would interpret it. as just from a random point of looking at charts. This one might be a little bit better example. Here's a shoulder, here's the head. And you'll see that oftentimes, if you can draw a line from the left shoulder to the right shoulder, that'll often give you the idea where the trend is. In this case, I mean, it broke this trend line. It did go lower, but the thing about this one is it came right into the zone. We don't really do much with that types of. No, I don't really pay that close of attention. Usually, what I'm looking at, I'm looking more of the wedges or the trend lines, which is pretty much what the head and shoulders will do. But this would be a shoulder. The shoulder usually is up here. It just gives you a little bit of a lower shoulder before the breakdown. But a lot of times, if you can draw a trend line from like one shoulder to the other shoulder, a lot of times you can get a nice little trend, which will help to determine what the direction is. The heads a lot of times are what they're really doing is this is where the price gets driven up above a certain point. It's everybody sucked into it, and then it just falls off. Or the reverse is true to the downside. It's upside down head and shoulders where you have a so this one would be, well, I wouldn't call that a head and shoulders. A lot of times you get it. Yeah, I'm not.
I was about to say, like, even head and shoulders. The only head and shoulders I pay attention to is the shampoo.
Yeah.
Like I focus so much on wedges and stuff that there's never been a point in my trading where head and shoulders was important to me.
In my earlier days of trading, I used to pay attention and listen to it because that was a very common pattern. You hear people say, "Oh, there's a head and shoulders pattern." There's so many other ways of determining the direction. Usually I'll look at it like a head up here or like an upside down head. It kind of dictates a lot of times a reversal point before the big move down. And that's about as best I can come up with. Like this would be a shoulder, this would be a shoulder before the breakdown. Usually by the time the head and shoulders is formed, it's already past the point of the entry. But it does dictate, a lot of times it will indicate a reversal.
Yeah, I like M's and W's. I find them easier to find. So I'm not the one to talk about head and shoulders.
Get rid of some of these. Here's a trend line. Get rid of some of these. Then you just clean up your charts just by getting the. You don't want to take these rectangles away because that's part of the program. That's part of the indicator.
If you do accidentally remove the triangles or the rectangles, you need to remove the indicator and put it back on.
Yeah, just if you want the indicator. Let me show you how you can do that. Because usually what I'll do is especially when they have a new version of the indicator, I'll just come over, right click on the chart. If it comes up, right click on the chart, and then go to the indicators list. And you'll have just the one indicator. Get it loaded up. And that way, what I'll do is I'll put the indicator on. I'll come in and I'll put my objects on. Usually what I'll do is I'll go to my objects list, and that's where I have my stop line, my open line, my trade line, or my target line, and I have that one vertical line. Put all those on that you want. Make sure, and I don't know if I have any arrows on this one. Let the labels stay there. That's all part of the program. All the rectangles, if it has a PW, you know that's a rectangle that the program designated. And then once you have that set up, you have everything there. Then all you do is right click on your template and you save the template. And it'll come up, this box will pop up. Click on OK. Another box is going to pop up. And then you're going to give the template name, like I gave it the arrow version, and I have my date. The version came out. This was at 21 January 31st. That's how I do it. And I just click on that to load it. Actually saved it with that. and click save. And it's going to ask you, do you want to replace it? And I'm going to say no, because I already have it saved. But they would just click yes, and then it would be, you would have it loaded. And then you can go through all the other charts and just load the template on each chart as you, so in other words, like, let's say I did make a mistake with this. Let's say I did remove something here that I didn't want to remove from the objects. Let's say I clicked on this one. Well, let's see. Well, let's just say you messed up your chart somehow. All you do is just go right click, template, load. Click on the one you want to load. So I'm going to load this one. I'm going to click on open, and it'll refresh everything, and you have a fresh chart up, and you didn't really lose anything. Okay, let's move this thing over to the 8 o'clock hour. Actually, it's at 8:30, so we're already in the reversal zone here. It starts at 1500 hours. We have another one at 1700 hours. It's right there. So right now, if we get a up arrow in a downtrend, we can take that trade as a reversal, because this is during the time frame for you. We oftentimes get some reversals. You still have the rules still have to apply. You still have to have the room to the next zone, and you need an up arrow. So if I get an up arrow now on this chart, I would be good to go. Let's take a look at that US CAD trade. Let's see where that's going.
Yeah, getting a little bit of heat on that one.
Take a little heat on this one.
Yeah, a little bit. GCAD, right?
It was US CAD.
Oh, US CAD.
Yeah,
really?
this was the
yeah,
arrow.
okay, US
This is
CAD.
our bounce arrow go. So again, like I said, I'll be looking at you may get a little, which is pretty much this bounce right here. This is right. You can see where I drew this zone right here.
Right on
it
that
came up
line.
and it went right to that line where I drew that zone. Oh, here we go. CAD Swiss. Let's take a look at that one. But this one still has some, this one's still okay. You still have green arrows, still have green bars, or rather green candles. It may pull that back a little bit, but still good. CAD Swiss. Let's take a look at that one. CAD Swiss. That's over here. CAD Swiss.
Second column, third.
There we go.
There you go.
Okay, I'm seeing we have a down arrow and a uptrend. As best, we're gonna zoom out, zoom in as far as we can, and we can see still have another level we can go. When that thing turns, when that thing goes basically all white, that's when we know you're zoomed in as far as you can go. We're in a downtrend, down arrow. Ooh, this one could be kind of
yes, sir.
We may have a trade here.
Well, look, you draw a nice wedge there, Al. Once it breaks the bottom there, boom.
Yeah, right now it's got to break through this green zone, but once it breaks through the green zone, now we are in our reversal time. Remember that. Oops, what was that? To the next green zone, we have 28 pips. So if we can get this thing to break through this zone, we have a trade. I'm going to put my target, my stops on. So this target was, the entry on this was 70.24. We really can't take it yet because of the that little zone right there. Let's see, let's go to my objects. And I'm going to put it my entry, trade open at 0.7024. That's the entry. Our target is going to be 0.7004. That's our 20 pips. And our stop would be at 0.7064. Trade's all set. This is the entry. Now what we can do with this is we can take a look at that lower time frame. Let's go to a 5-minute chart. We may not even have a zone there, but I think we will. We do. You can see how tight. Yes.
Sorry, my friend. I just wanted to know your advice on this question here that just came up in the chat real quick. Would you take a buy on a 5-minute chart? Or we're only scanning 15 minutes, right? We're not scanning 5 minutes to go take these tight entries on currency pairs. We'll do 5 minutes for indices and precious metals and crypto, right?
I'm not sure what they do for crypto, but everything else, what you said is correct. You have 5 minutes for the indexes and gold.
Yeah.
And I'm guessing crypto, but that
it
makes
is.
sense.
It is. It is the 5 minute that we do for crypto. So
there is a technique with if you have 2 arrows before the money zone. For example, let's say during the overnight session, you get an arrow over here, you get another arrow over here, and then it comes into the money zone. There's a technique with that when you get 2 down arrows, or in this case would have been 2 up arrows. Then you can take it but you move into there's a multi-time frame where you go, then you would drop down to a 5-minute chart and then take the bag entries just like you would if it was on a 15-minute chart. That's pretty much the extent of what I know to be taken on 5-minute charts. Again, on the indexes and the gold, where they're a lot more volatile, being on the 5-minute chart may give you a little bit better entry and get you in and out of the trade a little bit faster. As a rule, I'd say wait for the setup on the 15-minute, and then if you want to try and fine tune it, like here's a good example. This is where the peekaboo really helps. Is that here's where we had the alert. So basically, off of this candle, we would have had to take a short. Well, you can see how this thing's going against you right now. It's the entry was at 70.24 and we're at 70.28 already. So right now it's pulling back up to retest. It's actually pulling up to retest this. As long as the lower time frame is going against you, the higher time frame is not going to go with you. You have to wait for that to pull back, come back in, make a new, and oftentimes it'll bounce off of a trend line. What I'll do is I would take a trend line, say from this high here to where the zone was. I like working from the previous zones. Draw on a trend line like to there. And if you're still inclined, what you can do is that once it comes up, if the trend is right, you could take this trade right here as it breaks through. This could be a trap right in here. You'll see that a lot of times when we're drawing the wedges, where it would break out of a wedge, come back up.
7 pips, right? 7 pips?
You're going for 7 pips. We're going for 7 pips. So we come up and get you maybe 5, 6 pips, but then we'll just immediately turn right around.
So
we're in it now. Actually, this would be we are in an uptrend, but we're also in the reversal zone, the contra trend trading zone, which is from 8 o'clock to 10 o'clock. So let me mark this zone. So actually, if we got which we did, at 7 o'clock or at 8 o'clock rather, 1500 hours, which is right here at 1500. So if we have a down arrow, which we did, in an uptrend, which we do, we can take the trade contra trend if it's within that zone. But this is where it's prudent to get on that lower time frame, especially as it goes against you, to maybe get a little bit better entry, or to just wait till it comes back down and then breaks through here and closes and gives you that little bit. You actually have a little bit of a wedge right here, lower highs and a flat bottom. So if you took this trade right when the candle opened, now you're taking some heat. But now what it's doing is giving you a little bit better entry. But the problem with this trade is you have this green zone right here. So it's got to get through that zone before it can hit your target down below. So even though it isn't an uptrend, even though it is in the reversal, it still has to fit the criteria. You have to get through this green zone. And so there again, I'd be looking at break this blue line, break it, come back, retest the blue line, and then take it short. Or if it comes back down, it closes with like a candle with very little or no wick at all, then you could just take it, because that means it's got a lot of downward momentum.
Yeah, that's a hard. This is a hard one to go at.
Yeah.
This is not something that that I would be taking. I have actually no appetite for this trade.
I would have an appetite if it could break through this zone.
Or if it came all the way up and rejected that red zone.
Yeah.
Maybe I would take a piece of it to the green zone, but I wouldn't be sitting in this for 20 pips or whatever.
Yeah, but actually, when you look at this, when you go back to your 15-minute chart, this may be a bounce arrow go type of scenario where here's bounce, arrow, go. And I like that. I do like the fact that it is pulling back and is respecting the top of this wedge.
That is a really good point, Al. And like on my chart, it's breaking the wedge right now. So it's 4 tags on the trend line, and still.
Now, one thing you can see here, you can see where the money zone is right here with the shaded. You can see how deep. With this was formed before the money zone. Here's where the money zone started. This green zone was formed before the money zone. So if it can break through the bottom of the money zone, then you may have a nice little, you may be able to catch a little bit. If it can break through the bottom of the overnight low, which is basically what we're talking about, if it can break that, then you have lots of room to the downside. And that's all the way down to here. So this could be a nice little move as well, but you may have to take some heat in the process, or you may not get as good of an entry as you like, but if it can break here and head on down to this area, that gives you 30, that's a 30 pip trade. I would probably be happy with my, well, I got a line here at 18 pips, which is right where this green candle over here started. This is where we had the bounce, the up arrow. If this is where the up arrow started, then that means there were some buyers that drove it up. So there's some buyers underneath in this area. So if it did come down, I would be wanting to be getting out right around this part. And if you got in here at the bottom of that green zone, say best case scenario, you got in the bottom of here. Now you'd be looking at a trade of about, you're only looking at 14 pips, and you could get a little bit more if you had the momentum, but I would also expect that you might get a little bounce right at this area. How's that for a explanation? You can see where it came up. You can see where the price is coming back down. It came up. This was rejected. Let's see.
So, Marty, that's a great question. How does one decide where to set his or her stop loss when they use wedges? There's a couple ways. One could be a couple pips on the other side of your trend line. If it's a good trend line with multiple hits. So when I consider a good trend line is at least 3 or 4 to the pip tags, and the longer the wick that it hits, the better the tag. So, but I need at least 3 to say that that's a valid trend line, and then I can put a little bit of weight behind it. But I'm not going to put my stop loss on the other side of a trend line that's only been tested once. You know, and you get one bounce on it, that's not enough, guys. You can't have 2 connection points and put your stop loss on the other side.
For myself, I think that's a really good question. For myself, I look to see how many hits we have on this trend. So basically, this trend line right here, if I'm looking at where someone mentioned about head and shoulders, it's a little bit like a head and shoulders right here. So I would take it to the top of where the high was, and I'll see if I can find a hit. So there's an anchor. I wish I could draw these things up. See if I can expand this a little bit. Wrong way. Try this way. There we go. That's a little better. Whoops. Here's the top. Here's the, now if I look and see, I'm trying to align as many of these trends as we can. Here's a hit. Now this one kind of violated. Here's a high. Here's a lower high. Here's a lower high. This is kind of like an equal high. So right now I'd be looking at we were looking initially before this last candle came up, we were looking at a trend line pretty much like this, and maybe go ahead and align this being the anchor. I kind of like this as the anchor. Here was a strong move down, came back up, retested it. We have a little bit of a, what they call a doji or shooting. Actually, this is more of a doji. The open and the close are right about the same point. Here's a doji, and this was a higher high than the, you have a lower high on either side of this one. So I'd like to use this as a pivot high. So here's the anchor, here's a hit. Now, here's the third, here's a hit right where the arrow was. This was your third hit of the trend line. But guess what happened? It came back down and it went, here's your head fake right here. So what if I'm looking at this particular scenario view, let me find, where's my line channels, shapes, here we go. So if I'm looking at from this point to the bottom of where the wedge break right here, that's a trap. I view that as a trap. It came up, broke the line, couldn't close above it, and now it's looking to come back down and retest. This is a trap. If I were to take the trade on this down move here, I would want to have my stop. Generally, I want to have it at least above here, and I like to come over and see about where, at least where, at the very least, where the midline of this trend line would be. So I'd be probably more apt to have my overall stop would be, I like giving myself a lot of space. Now, ideally, with the strategy, we're using a 40 pip stop. But if you were going to go for, say, less than 20 pips, I would want to have my stop at least probably, I really like this area right here. It's coming up into the zone. We have a little bit lower highs, still a lower high. Even though this thing broke up, it's still lower than this one. So this is the reference. If it breaks this, you may want to get back out, and if it takes you out and it comes back, it gives you another opportunity to get in, but it saves you a lot of headache this way. So this would be 24 to 32. See, this is, so we went from a 40 pip stop to an 8 pip stop. And if you have an 8 pip stop, you can take a bigger position. If this thing does break, the smaller your stop. Like you said, your stop is your profit calculator. The more stop you have, the smaller the position, the more move you have to have X amount of profit in the trade. If you have a tighter stop, you can take a larger position and have and you can go with less pips for the trade. Rather than 20, you can go for 10. If you have double the lot size, your profit's going to be the same with a 10 pip target as a 20 pip target if you can double the lot size. Well, by adjusting your stop, you can take a higher position, and then rather than going for the 20 pips, you can go and maybe get out with a 10. And that position size calculator, it is done. We're just waiting for the approval to be able to start getting it to you guys. But I view this as a trap. But also, I need to see a break through the bottom of here, come back, retest, and then come on back down again. And when it comes back down and takes this out, it should come back. It's a good chance once it gets through this area, it comes back up, retests, and see if we can find some more sellers to keep it driving on down. This is a good area where this is a good example of how waiting a little bit before. I mean, when you get these alerts, oftentimes you don't have to catch it, be jumping on it right away. A lot of times you can just wait a little bit, let it develop, let it pull back a little bit. And then once this thing breaks, then you could go take it. But again, we have a zone here. We have strong move up, some red candles. So right in this, where these red candles are, this is where the sellers tried to take control, couldn't do it. And the buyers took it, and the buyers drove it back up again.
And I believe completely what you're saying, Al. And I've seen that happen multiple times where if I hold off before I enter, sometimes I get a much better position. So I'll make an extra 5 pips on that same trade as someone that would take the trade as soon as they have the opportunity to.
Exactly.
Excuse me, Al, we have 2 alerts.
Oh, thank you. Euro British. We'll take a look at this one, and
Aussie US.
Aussie US and Euro British. Let's try the Euro British. We're more in the time zone for that. I'll go for the Euro British, see what we have with that.
Yeah, you're right.
Euro British.
What do we got on EG
Third
here?
column, third one.
Yep. Here we go. Thank you.
Holy sugar.
Okay, we are in a downtrend. I can just look at it right now. We're in a downtrend in a zone below, no trade yet. If it breaks through this zone, then we could possibly have a nice little move to the downside. But right now we have to wait and see what happens with this zone. Let's go to the Aussie US.
Well, that's a really strong zone, Al. That's really strong. It goes back until like the beginning of the month. Oh, beginning of the, so my bad. We're only the third of the month.
Yeah,
I was on
the beginning of this month.
I was on the 1 minute chart.
I can see right now that this one, you have like 3 pips to the upside, and you only have 11 pips to the downside. And this whole zone is only 11 pips wide. Again, no trade, in a very tight range. I would want to see it. It would have to. Let's see as we zoom out. Make sure we have our trend correct. Lots of red, very little green on the bottom. So we're in a downtrend. So I'm going to mark my arrow. Mark my zone. Here's my zone right there. We know we have a zone right here. Move this up just a little bit. Zoom out. And if so, right now, if we were, we know that we're in a downtrend. Let me move this thing over here a little bit. And if we can get a bounce, like here we got a bounce arrow, but no go because we're in the wrong direction. If we get a bounce off of this one, it get a bounce, takes out this zone, gives us an arrow and a retrace, and then pulls down, then we would have a trade. But it's got to get through this zone right here. You know, staying out of bad trades is just as important as getting into good trades. Maybe
yes,
even
sir.
more so. Maybe even more so.
Yeah, it's easier on your head.
It's a lot easier in your head. Keeps the emotions out. And if you have a trading system that has very clear rules and takes the guesswork out of it, that's why some of these artificial intelligence softwares work so well, because the computers don't have emotions. They just say, this is the parameters. And if it may be off by a tick. And it says, well, it's not there. There's a line in the sand that the computers say, if this happens, I take it. If it doesn't, I don't. People have a little bit more subjectivity to it, but they also start getting their emotions tied into it. So that's why the artificial intelligence software, why these alerts are generated. We don't get the arrow unless certain parameters happen. And then we have rules that know when these alerts happen, there's certain rules that apply to give us the human intervention to the trade, but also know that over the test of the software and how they determine how to use the software, that certain parameters need to be in place. And if it doesn't fit, it doesn't fit. If it says you need a 20 pip, if you're looking for a 20 pip target and you need 20 pips in the next zone, and it's only 19, it's a no trade unless you're willing to take less of a trade, but you still want to keep the risk the same, because the software developers are saying through our testing of this system, we need a 40 pip stop to stay out of it. It may go up to 39 pips more often than not, and still know that the 40 pips kept you out of harm's way. I would not readjust my stop. I would readjust the target, but know that the more you readjust your target, the more of a risk you're taking for the potential reward. Any questions? Any other questions we have that we haven't addressed yet? Hey, break on the wedge on the, I don't know what pair you're looking at. EA breakout on the wedge on the 4 hour. Is this on the same pair here? On the Aussie New Zealand? Or Aussie US? I don't know what pair you're talking about. I'm looking at the question box.
Oh, the answered questions?
Was that answered? Oh, those were answered. Okay.
Yeah, the open ones.
I had the wrong button there.
Yeah.
Yeah, I addressed it. I sent the screenshot and I kind of
okay. And
gave
how
an
about
idea.
the British US counter trend and the resistance on the M5? Well, Gary, we can take a look at it. British US right here. And contra trend. So we're going to come over here with the zones. And we have, go to 1500. Right there. Go to 17.
We got a wonderful group of people this morning, a 75 in here.
Oh, wow. It's getting
so I hope
out.
you
That's
guys
great.
are getting a little bit of value.
Hope we're giving you some value to what we're doing here. We're not getting a whole lot of trades today, but we're giving you a lot of explanations as to why to take trades or why not to take them. And that's one of the things we try to do in this room is to try to look at a trade, and we want to analyze it from a technical standpoint if we have time. If we have, we don't want to do that in exchange for looking at trades as they come through. But when they're slow coming through, then we like to analyze them, show you some of the technicals about why or why not it may work, where some bounce points may be, and just to give you a little better feel for what you can expect with some of these. You can analyze your own expectations for some of these trades. Let's see. Now, what was the question on this? This one was you're talking about 5 minute, I think we were talking about on this one. It's a British US.
Yes, we were.
We're in a down, from this, we're looking at a downtrend. Let's make sure we are.
Yeah.
Sometimes if you zoom in, you'll find out that there's some zones that are hidden that you don't see that would change the direction, but this is a downtrend.
Excuse
Here's
me.
our arrow. Zoom out. So we're in a downtrend with a, right now, this was, as I say, we're still on the 15-minute chart. Let's look at 5 minute. Again, this would be one of those cases where you don't want to be, you want to make sure you have the higher time frame momentum in your favor. This would be contra trend. We're on a 5 minute chart. Now, I mean, this, I still would not take it on the 5 minute for the Forex. I'd like to get you want to have the momentum of the 15 minute. The higher the time frame, the more valid the directions are going to be. That's just basically bottom line.
Nothing else to say to that, Al.
Yeah, I have nothing else to say to that. I mean, you go into 1 minute chart and you may have a nice little spike. One thing about you, if you notice on a 1 minute chart, a lot of times, if you look, say, wow, that's a really big move. But if you really measure it, it's like 2 pips or 3 pips.
Mm-hmm.
If you're on a 15-minute chart and you see a big move like this, you say, wow, and that might be a 20 pip move on a 15-minute chart for the same your perception is so skewed. Sometimes you get to these lower time frames.
Talking about lower time frames, someone mentioned a W on US 100, so NAS 100, and I looked at it and it looks really nice for a short.
The US one, I don't think I have that one on my chart. Well, is that basically the NASDAQ? I do have a nice NASDAQ one. Let me take a look at it. I just put this one on the chart yesterday. 5
US
minute.
100?
We'll go 5 minute. Let's scroll up. Let's zoom up.
Oh, US Tech. Okay, yeah.
US
Tech.
Right? That's basically the NASDAQ.
Yeah, that's NASDAQ.
Okay, there's so many names.
It's one of Eva's favorite pairs too.
Yes. I'm gonna buy
so
it.
look at the green zones. I don't know why
lots of uptrend.
Why I liked it short, man. I don't know.
Eva has a love-hate relationship with this pair.
Actually, no, that would be any yen pair. But right now I'm in a buy in the NASDAQ.
Okay.
Well, there was an alert earlier.
There's an up arrow, and so we're in an uptrend.
Why
did I see that? Now, remember on these NASDAQs and indexes, you're looking for $5 moves, $10 stops. But remember that the denomination, like on this one, is at 13,552. So if you got into this thing at 13,552, there's throw this out here just as an example. So I go 13,552. See, that's your entry. Your target would be 13,557. $5.
$5 target.
$5 target. Is that right, Eva? $5
Yes,
target, $10 stop.
target.
Yeah,
Yeah.
10 stop. Yep.
And $10 stop. So it'd be 13,552.42.
Yeah, I will apologize for that one because I don't even have it on my charts.
Well,
I've got all of them on my charts. So
yes,
when
it's not one that we normally talk about. You don't have to apologize for anything. As I said, it's not really one that I just happen to have it here and someone asked about it, so I put it up. But it's not one that I would normally I don't normally trade this. I just put it on there just for conversation's sake.
Yeah.
So anyway, but this is you can see it's a very tight range. But so you have to and our position calculator actually has that in built into the calculator. So when we get that, you'll see what we're talking about.
So you're only looking for a $5 move on this?
Yes, $5 move.
Really?
Yeah, that's 50 pips, bud.
Yep. So anyway, it is 8:59. Dante's coming in at 9 o'clock, so we need to close this down so Dante can, so everybody here can switch over to Dante's room and continue on with the discussion as your time allows. I would like to thank everybody for coming in. I hope hopefully we're able to, you got some value out of this session, and we'll be here again tomorrow, same time, same place. See you then.